Hello everyone, this is Matthew Frailey with BreakpointTrades.com, bringing you advanced technical analysis, market commentary, trade ideas, and mechanical systems. And we've been doing this for individual traders, mom and pops, and institutions since 2003. Okay, so let's go ahead and get started. So this is going to be a technical review of the markets ending the week of November 21st, 2021. I'm recording this newsletter on Sunday evening, so many of you may be reviewing this on Monday, the Thanksgiving week. All right. Here's the table of contents divided into 7 major sections. Again, it's going to be an extensive market newsletter review. We're going to first look at the major indexes from a top-down fashion. We'll look at the bigger picture charts, monthly, quarterly, daily, all the way down to intraday time frames and some of the KISS systems. We'll look at do an overall overview of important market indicators. Got quite a few indicators, especially breadth indicators, that are standing out. All right, I'll discuss that in a minute. We'll also review bonds, 10-year treasury yield. We'll examine most of the sector charts. We'll review commodities extensively, from the index itself to crude oil, natural gas, copper, the ags, various other commodities, even lumber. Lumber's having a nice bounce from a technical standpoint. We'll look at particularly the US dollar and the euro and some of the cryptocurrencies like Bitcoin. We'll review precious metals, gold and silver, GDX, GDXJ. Those are the gold miner ETFs. And I'll review some trade setups from last week. I'm not adding any new trade setups here. Again, I already sent out my newsletter to our paying subscribers. You can see I have some comment here, which I'm not going to talk about in this video. But basically, guys, in a nutshell, market continues a very nice uptrend. Last week, we saw bifurcation with the Dow and Russell 2000 closing down, while the Nasdaq and S&P closed up, especially the Nasdaq. What we're seeing here is very narrow breadth. We're seeing a handful of 20 or 30 stocks leading this market. An analogy there would be in a battlefield, the generals are on the field fighting and the soldiers are not. So kind of an interesting scenario. That needs to work itself off. Otherwise, we are vulnerable to an eventual pullback. Next week, or whenever you listen to this, maybe this current week, is the shortened holiday week for Thanksgiving. The U.S. markets are closed for Thursday, for Thanksgiving, of course, and they only trade for half a day on Friday. Usually the market is up the final week of the month, so I don't think we'll see any exception there. That doesn't mean every day for this week has to be up. It's possible we could see a down day on Monday or Tuesday, but likely Wednesday and especially Friday, that half day, and for the week we should end up. But I do think the market after that is vulnerable, maybe to some sort of pullback. We have some really interesting things showing up here. The Nasdaq, for example, made a new all-time high on Friday, but we have a record number of stocks in the Nasdaq that are making new 52-week lows. And you just don't generally see this. There's a record number of stocks in the Nasdaq that are trading above their 200-day moving average, something like 36%. We're at new all-time highs. That either needs to correct itself or we need to see sector rotation, and see the other indexes come back, see some of the smaller names come back. Otherwise, we're vulnerable to some sort of pullback. And I do think next year, 2022, is likely maybe to be a consolidation year for the market. We've had 2-3 solid up years in the market. We're due for a consolidation. So let's go ahead and get started here with the rest of the newsletter. So first off, here's the index sector table and what transpired on the market last week. You can see what happened on Friday. For the week, again, we saw that bifurcation with the Dow and Russell closing down. The small caps there, the Dow 30 stocks, and of course the S&P slight gain, and of course big gains in the technology area. Again, there's a handful of these technology stocks that are basically leading the market, guys. You can see for the week, despite some strength with the Nasdaq making new all-time highs, out of our 21 market sectors we follow, you can see them here. the majority of them closed nicely down, especially energy. Oil services down about 11%, XLE down 5%. Again, what was to the upside? Technology and semiconductors. That's basically the Nasdaq 100, right? Utilities were up. Dollar had a good week, so not surprising there. You know, home builders and consumer discretionary. US dollar had a big week, up 1%. It's a big week. Cryptos had a big correction last week. They're bouncing a little bit overnight here. Commodities, I'd say most of the downside, especially in the energy area and the precious metals. What we're up in the commodities, primarily natural gas, but a lot of the ag area, corn, wheat, coffee, etc. All right, let's move on. So this shows you the economic news calendar for this shortened holiday week. For Monday, 22nd, we have existing home sales and initial jobless claims there on Wednesday. GDP, durable goods, those will be watched. And we're mostly through earnings season, guys. Remember, it is a shortened holiday week. By the way, we also have FOMC minutes on Wednesday. Take notice of that. Let's go and jump to the charts. So, first chart below is a weekly snapshot of the 5 key major indexes. So, like I said, bifurcation down. 2 down weeks now in the Dow and the Russell here. As you know, the Russell had broken out of this big horizontal range. It's now come back to back test this potential area that could be support. Let's see if we can bounce off of that. The Nasdaq areas, they made new all-time highs, and the S&P was up, but it's more of a doji for the week. Here's a monthly view of the major indexes. Again, we've had this crazy vertical slope move up from the March 2020 lows. We did have that seasonality played out for September. We had the pullback there, but then October came roaring back, and we're mostly up for November except for, say, the Dow. That's the only one that's down. The Russell's way off its highs, but solid candles here. Here's the quarterly view of the major indexes. So each candle represents 3 months or 1 quarter, 4 quarters in a year. But the reason I'm showing you this is just to give you an overall bigger picture. Okay, you can see the start of the secular bull market in early 2009 back here. We've been in this very strong secular bull market since. Now, one thing to note here, guys, is just the slope change. So you can see, you know, after the 2008 correction and the beginning of this bull market, we've had a nice steady uptrend here. You see that in purple. But after the February-March 2020 correction, notice how the slope changed. It went up a much stronger degree. So bull markets tend to end in blow-offs. Again, don't get me wrong, I'm not calling for the end of some bull market yet, but definitely more indicative of a late stage bull market when the slope increases like this. And, you know, we've had 3 up years now. I think 2022 is going to be a consolidation year. It's not just going to be an easy money year. It's going to be more of a stock picker's year. So maybe 22, we get some sort of correction like sideways ABC correction, and then maybe we can run again. That's my thought, guys. 2022 is going to be more of a trader's market. We're definitely overdue. Remember, the markets ebb and flow like a stair step. We're eventually due for that, you know, sideways consolidation, right? Okay, let's move on. Here's an S&P quarterly chart. So it shows you the same thing. 2009, secular bear market low. So we started the secular bull market. You can see the slope here for the first, 10 years of this bull market. And then look how much stronger this slope is. It's just unsustainable. It should just be very obvious. Eventually, we're going to need some sort of sideways chop correction to work that off to have another move up. That's why I think 2022 will probably be more of a trader's market. Here's a daily view of the major indexes. So remember last time I talked about how this August, September highs, resistance, that should now become support. Well, the Dow has been quite weak. You can see at the top here, it's had so far a zigzag correction. That could be an ABC. So it's now near this previous resistance become support. So if I'm looking to buy one of the indexes, this is probably one, maybe a lower risk. You're retesting this prior resistance, now support. The S&P, well, it hasn't pulled back. It's more just it pulled back to its 9 EMA here and has bounced sideways. Still could be some sort of wave B, maybe wave A, B, C. That's my concern. Here's the Nasdaq 100 formed a Doji shooting star on Friday. Same for the Nasdaq itself. And for the small caps, they were in this horizontal rectangle range for 9 months. They've pulled all the way back into it and even a little bit below it. So going to watch those areas. What would be healthy for the market is maybe to see some rotation out of this big tech area, but then back into some of these other areas like the Dow, like the small caps, which tend to do better this time of year. Okay, we'll see if we get that. But concerning the negative breadth that I'm seeing on the Nasdaq and some of the other things, I am a little bit concerned with that. Moving on to the S&P 500 charts, particularly, here's the weekly S&P. Again, you can see the 2020 low from that February-March correction. We've had this very nice uptrend. Now, I don't like to get way into Elliott Wave, guys, but what you can see here is a very obvious 5-wave type pattern. Wave 1, 2, 3, 4. And clearly now we're working on some sort of 5. Once that 5 is complete, remember 5s can go on, they can subdivide, etc. It doesn't look like it's complete yet. But then I would expect a larger degree ABC type correction. You know, maybe we get that sometime in, 2022, some sort of larger degree ABC. All right, be aware of that. Moving on to the daily. So a couple weeks ago, I pointed out this exhaustion condition that you see highlighted here, where the S&P in 19 days, it only had 2 down days, and it was 17 of them were up. That only occurred 3 times in 50 years. We were due for a reversion to mean pullback, and we got it. It wasn't much of a pullback, just barely closed below the 9 EMA here. So, and then we've rallied back. So you can see we're back testing this previous high, potential little double top there, little ascending triangle. Again, we are going into the shortened holiday week, so, wouldn't surprise me to see us pop a little higher during the Thanksgiving week. Now, after the Thanksgiving week, we'll see what happens. We'll be into December. And guys, usually in December, the first couple weeks is when you can be vulnerable for the market. Usually about the week before Christmas, you have the Christmas rally. But, we are vulnerable maybe to some sort of short-term pullback, say in early December. Here's a 60-minute view of the S&P. So moving down the time frame, you can see horizontal lines, they represent your support and resistance. We stalled here at resistance in early November, pulled back to this support, which I pointed out, bounced off of it. And we've been testing this resistance again, 3 times essentially. So we're going to break out of here early this week. We'll see, probably the case. Now, ES futures tonight, as I'm recording, are up about 12 points. We'll see how they are on Monday morning. Here's a 2-hour view. Again, you can see we stalled at that resistance early November, pulled back to support, retesting this resistance up here. These are your support areas. That's your resistance. Next, moving to the KISS chart. So here's a weekly view of the S&P. Here's the DVTs. Remember, those are like higher lows. So no changes here, guys. DVT, higher low. Stop for the weekly KISS time frame is still at 43.70, so it's pretty wide, but these have not been hit on the weekly. The last time they were hit was back in early 2020 in February for that correction, kept you out of the correction, and they've been in ever since. Again, the weekly KISS charts are good for those of you who, you want to mostly stay in the market, going to give it wide girth, but you want to have some sort of protection, and you can see they've done a good job. Here's the daily KISS. So short term, KISS system stopped out back here in September. They then went back re-long here. So just slightly lower than it got out. More of a wash. And it's been long since. You can see you got a pretty tight DVT up here. Moving on to the Dow. So the Dow, as I showed above, so far you have a potential A, B, C pullback into the support range. So maybe a low risk buy in this area. Remember, in uptrends, you want to buy A, B, C type consolidations. Moving on to the Qs. That's been the strength in the market. New all-time highs up 2.35% for the week. Here's the daily triple Qs. We made a new all-time high again on Friday. We still have this RSI 5 divergence, a little bit of 14 RSI divergence showing up as there. As you know, we got that typical correction there in September. Bounced right off the support. Made a new all-time high. Now, I don't have it marked here, but you can, at this point, count 5 waves. So there's a wave 1 here, 2, 3, 4, 5. So we are potentially working on a 5th wave. And we do have some divergence. A lot of negative breath. There's an amazing amount of stocks in the Nasdaq making new all-time 52-week high lows when this is making new highs, which is just astounding to me. Here's the 60-minute time frame, and there's the MACD. Nothing really standout-ish here. It looks okay still. Again, we're going into the holiday week for Thanksgiving. Here's the daily KISS, very similar to the S&P. Stopped out back here, went along back here in early October, and it's, had 6 new DVTs since. So if you want a tight stop idea, there you go. Moving on to the small caps, IWM weekly down 2.8%. So it's had 2 down weeks in a row. Remember, it was in this consolidation range for 8 or 9 months, broke out. It's now pulling back. Is it going to find support here? We'll see. Or is it a false break? Here's the daily view. So, very similar to the Dow. We've had this zigzag pullback here. I have it marked A, B, C. We have some support here. We also have a support trend line right here to monitor, and of course the 50-day. Just a note as an education, guys, these moving average ribbons, they're good guides. When they get too wide like this, you see that? Notice you also had a black candle back here, and along with the wide ribbons, when you see that, you're due for a pullback, and that's what we got. Now we're into support. Now the moving average ribbons have come together. So you have a lower risk area for a potential long if it can find support here. Here's the TNA. That's the triple long ETF. It's a little different than the IWM because this one does degrade. But notice I can draw a downtrend line here and a horizontal line here. So you got some big support areas here. And this here points out the, very overbought condition you had back here with the black candle, very wide ribbons. That was a good shorting opportunity up here. Now, this area is an area to monitor as potential support for a long. Here's a 2-hour time frame. Again, so far we have this ABC type pullback. We got big support here around 231, and then we have an open gap down here to monitor. So there you go on the major indexes, guys. Now let's move on to some key indicators. So here's the VIX. VIX has been bouncing up lately despite the S&P going higher. And that's important because take a look at this indicator down here. This is the correlation indicator. So the VIX is now uncorrelated with the S&P. And when you get that, sometimes you get, little corrections. So be warned, you have a little uncorrelation there going on. Basically means the VIX and the S&P have been moving up together. Here's the VVIX. Last week it went above the 110 VOMA line. And when that's happened, you usually get corrections in the market. Sometimes it's early. So far, we haven't had a pullback since it did go back above 110. Zooming into a smaller time frame or a shorter time frame on the VVIX, just 5 months back. You can see a little more detail here. You can see it's been a pretty good guide every time it's went above 110. You at least got some sort of market pullback, especially back here. Here's where it failed, where it went above 110, and then you had another big rally here. It went back above, or back below 110. Here it worked very well in early November. Then you had a nice little correction, Last week it went back above 110. Now so far the S&P hasn't pulled back. So, you know, if you took this as a short signal, you have to decide if you want to still hold in it or not. We do have the holiday week, but I do believe this will eventually play out, but we do have the holiday shortened week to contend with. So here's some of these breadth indicators, guys. Now these are really extreme. So here's the Nasdaq plotted right here. And I got a couple indicators here. The NALOW, that's the new 52-week lows. Below here, that's the new 52-week highs. So take a look at this, guys. You've had new 52-week lows spiking with the Nasdaq making new all-time highs. So on Thursday, for example, you had 409 stocks in the Nasdaq making new 52-week lows, while the Nasdaq was testing its all-time highs. On Friday, you had 322 making new 52-week lows. That's not just a down day, but that's a new yearly low. Okay. So notice it's spiking outside of its Bollinger Bands for 4 bars. Also, here's your new 52-week highs. It's been declining. So you have this negative breadth here that is a concern. Here's another very interesting chart. So a couple things. Here's the Nasdaq plotted below, again, making a new all-time high. This is the NAHL behind it. It's starting to dive. It's just barely above zero now. That's the new highs minus new lows, so the difference between the highs and lows. And here's a couple indicators below. The Nasdaq, the stocks above, the percentage above the 200-day moving average, and the percentage above the 50-day. Notice how we've had this disparity going on a long time. Think about it. The Nasdaq's at new all-time highs, but only 36% of the stocks are above their 200-day moving average. And even only 41% are above their respective 50-day moving average. And we're at new highs. I looked back in the history, guys, and I've never seen a condition like this. When this indicator was down here, it was always after some sort of correction like this, but not like this. So we've had fewer and fewer stocks participate in the rally. Eventually, this needs to be worked off. Doesn't mean it has to work out on Monday or Tuesday, but eventually this needs to correct itself. And that's what leaves this open for a bigger correction down the road. Here's another one, Nasdaq volume Mcclone Oscillator. It crossed the downside last week while this continues making new highs. Here's a condition back here where you had something similar and you had a little pullback there. But here's the NAMO, Nasdaq Mcclellan Oscillator, closed below its lower Bollinger Bands for 3 consecutive bars. So this is called our NAMO system. Whenever it closes below its lower Bollinger Bands, you get a buy signal. Look at the past. They've been good buy signals. But notice, guys, they occur after pullbacks. See this? And they're pretty good signals. But we now have a new signal right here at the highs. So again, this always occurs after pullbacks, but we have this now occurring with the Nasdaq at new highs. That's unprecedented. Here's the NYMO. So that's the NYSE equivalent, same deal. Below its lower Bollinger Bands with 3 bars. And again, this has been a pretty good indicator. Look at how well these buy signals worked in the past. We're below 3 bars here. That's quite extreme. Sometimes you could see 4. That's very rare. And 5, I think, is the most. So we are set to bounce. But, you know, the Nasdaq one concerns me. Here's another one, Nasdaq. Now this shows you both the NYMO and NAMO on one plot. So the Nasdaq with the NAMO right here. You can see below its lower Bollinger Bands for 3 bars. Of course, while this is making new highs, which is odd. And of course the NYSE and NYMO down here. I like this chart because you can see it all in one. It's a very nice reversion to mean mechanical type system. Here's the Dow Mcclone Oscillator. It is closed below its lower Bollinger Bands for 4 consecutive days now. That's very extreme. Usually 4 is the most you get. It's rare. 3 is even rare. Usually only get 1 or 2. And you can see in the past, these buy signals have been good. They occur after market corrections. Now the Dow has had a correction, right? The Dow's had a nice ABC correction for the last couple weeks. Notice this RSI 14 or RSI 7 is oversold. So what I think could happen in the market, at least short term, is we could see some sector rotation out of the Nasdaq and then into maybe the Dow and Russell. That's my thoughts. But longer term, that Nasdaq divergence has to work itself off. Here's another divergence that's been forming, the S&P versus high yield corporate. They usually move together, but high yield corporate has been moving down while S&P made a new high. Here's a weekly view. Again, you can see S&P, high yield corporate. Look how the two charts look identical to each other. But right in here, this time, they're starting to diverge. S&P versus value line. Okay, there's a divergence showing up here. S&P higher high. This made a lower high. And also notice the uncorrelation showing up, which is a warning. High yield corporate bonds themselves, they broke a support, selling off. 200-day moving average could be a target. As you know, they had this double top back here, which I pointed out. Again, usually this doesn't happen with this selling off and the market continuing to go higher. Usually this moves with the market. TLT 20-year bonds, whippy action lately, sell off, bounce from the oversold condition. I'm not going to view that too much into this right now. 10-year treasury yield appears to be forming a big coil, so that's something we're going to monitor going forward. All right, let's look at some market sectors, guys. Here's the transports, IYT. Remember, I talked about this cup and handle. We had a cup a couple weeks ago. We were at resistance. I said for a handle, we needed a pullback, and we've gotten a handle potentially, right? We have this potential A, B, C. And of course, you have this, potential cup right there. So cup and handle. So this is one to watch, particularly on maybe a sector to look to buy if you think this cup and handle is going to play out. But you want to see a trigger. Okay. You can see how nice your moving average ribbons are. Great guides. They pinch together like this. It's a low risk buy opportunity. They get too wide. You do for your correction. They're now starting to come in again. Oops. Okay, let's move on. Here's the financials. Now they've weakened more. They were in kind of a channel. They broke down last week. Currently testing the 50-day. Banks, same deal essentially, moving together. XLK Technology, again, just like the Nasdaq 100, they're moving together. It's these stocks that have been leading the market. We still have this divergence forming. Semiconductors, same deal. That's where the strength of your market has all been concentrated, is in these two sectors, guys. Industrials. They broke through this resistance a couple weeks ago. Now back testing it. We'll see if this holds as support. Previous resistance becomes support. Consumer discretionary. It's had a heck of a move out of this. I talked about it. The moving average wide there. We did pull back. Found support at the 20-day. Up again. Energy. I talked about finally a big breakdown. Remember I talked about this shelf support. Look how many times you tested that, guys. A pro tip, whenever you test a horizontal support too many times, an analogy would be, taking a hammer and you're hitting on the ice on a frozen lake too many times. It weakens and you eventually break. That's what happened here. So big move down. Clearly the inverse head and shoulder pattern we talked about back here played out, but it was time to take profits once it was forming this shelf top, rounded top. Oil services, same deal. Now this is a big correction. The inverse head and shoulder played out, but if you didn't take profits, you've lost those gains. Remember this chart, the bullish percent energy index? When it was at 100%, I talked about it. It can't get higher than 100% because it's based on a percentage of the point and figure stocks on point and figure buy signals. I said when it's up at 100%, it's time to reduce your positions, raise stops, take your profits. And lo and behold, that is playing out. That when it gets down here, that's the time for low risk swing long opportunities. DRIP, it was a long idea I gave our subscribers last week. Double inverse ETF for oil and gas stocks coming out of this nice falling wedge type pattern, MACD divergence. So far, nice trade. Look at your moving average ribbon as well, coming together. ERY was the other one, double inverse ETF for energy. Look at this beautiful rounded bottom. Just a gorgeous pattern. I put this out last Wednesday. Nice move up. So that was a way to play the pullback in the energy names, guys. They still look pretty bullish too, those inverse ETFs. Biotech, as you know, they stalled their 200-day moving averages the last couple times. This has been support. We'll see if it can hold there or not. Let's look at the weekly. The weekly doesn't look so hot. You have this coil. We're down back to it. Quite honestly, I wouldn't mind seeing this sucker break down like this. This is big support. I'd be a major buyer down here because then I think it would be set for a major rally. I think it'd be a major swing trade entry opportunity if you got something like that. You don't always get what you want, but something we're going to monitor going forward. IBB Biotech, that's another ETF that's been weak. XLU Utility ETF, coiling. It's a slower mover, but you got a nice tight coil here to monitor. Looks bullish. You can put a stop right here. And very tight stop. Your entry's right here over the trend line. Moving to commodities, DBC, commodity ETF. Nice pullback here. Again, it's got quite overbought. It's had a hell of a run here. It's in a long-term uptrend, but it may be due for a longer consolidation perhaps, especially if that dollar continues higher. Here's the daily. Now it's down to the 50-day moving average. That's your big support here. If this doesn't hold, you can see all the weightings here. Crude oil weekly view down 6%. Now it's back testing this horizontal previous resistance, now support. If that fails, you got a big uptrend line here. Crude oil on the daily. So far we have what could be just an ABC pullback into support. We'll see if that can hold or not. Crude oil on the bigger picture view, the monthly view, down 9% for the month. Natural gas broke this coil a couple weeks ago, back tested it as resistance. It's kind of chopping around here. So we'll see what it does. It may need to chop around a lot more, or if it were to come down to this area, that'd be an ideal buy down there. That's big support. DBA, that's been the agriculture's been the one strong area while energy's been weak. So you can see the breakout from there. Still looks good. Corn ETF looks potentially bullish. Got a nice long trend line here to monitor. Remember, you can trade this. It's the ETF. Soybeans. Soybeans, I pointed out this major base back in 2020. Big rally out of there. Look how wide your ribbon got here. So it was due for consolidation. That's what we got. This is now big support. This looks like a low risk long for soybeans. Joe, the coffee ETF, nice move out of this consolidation pattern. And of course this one, little black candle on Friday though. Maybe get some consolidation now. Lumber. Lumber has been a wild year. Big correction back here after the parabolic move. Perfect ABC or 5-wave downtrend here. MACD divergence, you see that? Had a coil break back here. Had another nice break back here. Big volume. Moving average ribbons all pinched, so energy is pent up. It looks set to push higher, doesn't it? There's not really a lumber ETF that I can see. You have to go long lumber futures, which is not ideal. Moving to cryptos, here's Bitcoin. So guys, Bitcoin had a nice correction last week, but it shouldn't be a surprise. Talked about this MACD divergence when it made a new high. That was a big warning. Remember, the time to buy your cryptos are after these consolidations, these ABC consolidations, or at major support like down here. So lost the 50-day, back testing it. Looks like it's weakening here again. Ethereum, same deal. Sold off, bounced near the 50-day. Looks like it's trying to form a lower high. One of the Bitcoin stocks I mentioned last week was Mara. It had a heck of a correction. I said you could get a low risk trade opportunity off the 50-day and here. Well, if you had a buy limit at the 50-day, you got a nice trade. But I don't think it's set to be, all roses from here. I think it's more set to chop around here, maybe even come down again. So this to me was more just a trade opportunity at this point. Okay. US dollar ETF, UUP. Guys, I've been talking about how the dollar was bullish. And, you had this ascending triangle. You broke out of here a couple weeks ago. It's on its way up to this next resistance. And if it can get through there, you got a resistance up here. Notice your moving average ribbon. It's a good guide. It flipped to a bullish configuration back here in June. All these pinches were buying opportunities. Okay. That hasn't helped commodities here, but gold has held up fairly well considering. Here's the Euro ETF. I showed this head and shoulder pattern way back in, I think, April initially, May, well before it played out, and it is now played out fully to its measured move. Gold on the weekly, down for the week, 0.9%, but the positive here is for the bulls, for the gold bugs. We did break this weekly downtrend line. So ideally, I want to see it hold this downtrend line now, guys. If it can hold that, that would be good. The dollar still looks bullish. Gold has rallied in face of the dollar so far. But we'll see if the dollar keeps going up higher, much more strongly. Will that eventually weaken gold? I don't know. But let's see if it can hold this weekly trend line. I do believe gold could have its day. Maybe it's 2022. Here's gold in the daily. So we stalled at this trend line here. Resistance, got all the support here, not a monitor. Silver, potential inverse head and shoulder pattern. Again, for silver, I want to see it hold this higher low. So far, it's stalling at the 200-day moving average there. GDX, same deal. It's pulling back. I don't want to see it pull back all the way down to here. Decide how much room you wish to give these guys. GDXJ, another junior. This is the junior gold stock miner, same thing. Pulling back from resistance here. All right, guys, finally, moving to some of these trade ideas. Wix was a short idea of ours last week. Look how well this sucker's played out. This was from last Tuesday's newsletter. You should be a subscriber of Breakpoint. Charbert SLI was another short of ours last week. Gave a nice trade. Stitch Fix was another short of ours. Look how well it's doing. This was a couple weeks ago. And guys, this is probably a good example. Like I said, in the Nasdaq, there's a lot of stocks making new 52-week highs. Well, this isn't some OTC stock. It's a fairly big stock, Stitch Fix, but it's making new lows. Knee was one of our long ideas from over a week ago out of this flag type pattern. Made a new high there. Looks good. Disney was a short of mine for quite a long time. Well, finally, over the last 2 weeks, it's played out. Lost this shelf support. It's now down to this next shelf support, previous resistance. Maybe it bounces there. 60-minute view on Disney. I don't have really interest in trading it here, but you do have some nice MACD divergence forming. Again, that's only a 60-minute time frame. Lucid was one of our long ideas back in late October. The EV space has been crazy. So this was an awesome trade. Our trigger was 27.50. You could raise your stop to each new high or low. It's been awesome. Tesla, the big boy, big correction here. It was obvious it was going to have a correction back here with the divergence, the wide moving average ribbon. Look at your black candle doji there. Pull back. What I don't know is if this is ready to go to a new high or form a lower high and come down in a C and fill that gap. AMD, of course, hell of a trade from this coil back here where we had it as a long. Quite extended at this point now. EW, here's a coil pattern. But again, I'm not putting any new ideas here. I will add some on for our paying subscribers. This is just a holdover for last week. It never triggered. It's still coiling. All right, guys, so we'll see what happens this week. I may do a shorter video this week going over some other things. And again, Have a wonderful Thanksgiving week, everyone, from YouTube. And comment, like, subscribe. I'm trying to grow this channel. Take care, everyone.